Good morning. Welcome to Trading with Larry. Larry can't make it today. You're joined by Eric Shamalov and Clint Brewer, Larry's analyst. How are you, Clint? Good morning.
Good.
Thank you for being with us today.
Yeah, good morning. It's great to be back on. It's been a while.
Yeah, it's been a while, and it's always great to talk to you. I like your analytical diving in, which is great. And we had a interesting conversation before we went on air on on small caps, which I'd like to get into. First, I just want to do a little rundown of what we're seeing this morning. Uh, Equity futures are flat. Europe is still a little weak, and it was weak yesterday. And I think it just kind of felt like Europe was maybe weighing down on the U.S. market in the early part of the session. As soon as 11:30 came around and Europe closed, I felt like a little bit of an albatross got lifted from U.S. markets, and I think that may have contributed to a little mini short squeeze that we had in the market. Every time you have volatility so low, there was like 5 hours, 6 hours left until the end of the trading day, and options trading just 10 points away were like at a dollar, which is extremely low. So I think we had a little bit of a gamma squeeze yesterday. Gold was up. Gold is down today a little bit. Um, Commodities look pretty strong. Interest rates up. So bonds have been kind of ignoring all of this Jackson Hole stuff that we're going to get rate cuts until kingdom come. So the bond market, especially on the long end of the curve, isn't really buying the story, or maybe it's part of the story with the yield curve steepening. Right? Maybe they're just selling the uh, the long end of the curve and buying the short end.
It's because it's inflationary.
It's because it's inflationary. So right now, markets are kind of quiet. Nvidia earnings coming up, and what do you think? I'll let you dive in here, and would love to know your thoughts about small caps since everybody all of a sudden is excited about them again.
Yeah, so we'll get to Nvidia in a second. Let's start with Powell and Jackson Hole because I think there's some interesting moves happening post Powell, including small caps and including what you're seeing on the rate side. So for starters, one, yeah, I mean Powell definitely ignited sort of the hopes for rate cuts. Um, it's funny because the FOMC minutes from the last meeting came out like 2 days before Powell spoke, and in the minutes they were clearly flagging inflation risks. So that was hawkish. And then but the minutes, that last Fed meeting was before we had that big payrolls miss on the July payrolls report, so they did not have that information at the time. And then Powell came out and clearly flagged the labor market being the bigger risk now. So moving that focus away from their inflation side of the mandate. And so, yeah, all of a sudden that put rate cuts back on the table. I think Powell even used the word restrictive to characterize where rates are now. And so that's what really ignited the small cap trade. Small caps do extremely well relative to large and mids after rate cuts or when the Fed is starting to cut rates. So you can look ahead 3 months, you can look ahead 6 months, 12 months. Small caps do better. And I think there's really two big reasons for that. One is I think it's about a third of the companies in the Russell 2000. So the Russell 2000 is an index of small cap stocks, and about a third of those companies are financed with floating rate debt. That number is only like 5% for companies in the S&P 500. So there's a more immediate direct impact to the bottom line for small caps when the Fed's cutting rates. So uh, on the debt side, on the cost of debt, so that helps. And then two, rate cuts should, in theory, help the economy, should help boost the economy, while small caps are more exposed to what's happening In the U.S. economy, they get a larger percentage of sales and revenues from the domestic economy relative to large caps. I mean, like you look at like tech and the S&P 500, and half their revenues come from outside the U.S. So there's an impact from domestic revenues there for smalls as well.
Yeah, here's a chart of the Russell 2000. And by the way, everybody's getting excited about small caps. I think you you ask the average person, give me the top five, small cap stocks in the index, they wouldn't be able to tell you. But all of a sudden, they're excited about it. You mentioned the interest rate relationship back here in 20. When did Trump get elected the first time? It was 2016, right? Yeah.
Yeah,
So there were no cuts on the table then, but they really dominated. So there's also this growth story around them as well. Um, and they really dominated for about a year after the Trump election, and then that fizzled out. Then you had COVID, and it just felt like anytime it would go up, it was just in sympathy with the S&P and the Nasdaq. And you look at it over the long term, it's still below its previous peak. So why do you think? I don't even I don't know if you follow small caps a lot. I don't, but why do you think that small caps haven't been able to break their all-time high the way that the S&P and Nasdaq have?
yeah. I think I don't follow small caps extremely closely, but one thing I would mention is that make sure you're choosing your index wisely. A lot of people like to default to the Russell 2000 index, which IWM is the ETF that tracks that. I think the Russell is pretty jam packed with unprofitable companies, and stocks follow earnings over the long run. So I'm going to guess that has something to do with it. To the extent that small, we were just talking about, small caps are more rate sensitive. So to the extent you had the Fed jack up rates in 2022 and pretty much leave them there for a long time, that's likely a contributing factor between what you saw in smalls versus large caps, taking off after that as well. Which is why they're kind of why smalls are starting to turn around now, is because all of a sudden those rate cut hopes are back on the table. I mean, you can look back a year ago, actually. Look back to September 2024. I mean, that's when Powell and the Fed came out with a surprise 50 basis point rate cut. They went on to cut two more times from there. Small caps did well, but then all of a sudden, when it looked like things were getting put on hold, that's when small caps started giving it all back, and now they're reacting again. So I mean, you can kind of clearly see the relationship around hopes for rate cuts and what happens with the small cap trade. But those hopes are back on the table, and now small caps are responding again.
Yeah, you mentioned also there was like a pivot. There was a pivot point when people started to get on that trade. When do you think that pivot point was again? I want you to kind of talk about that again. I thought it was interesting, and I'm going to put up a chart of the 30-year. And you mentioned the jobs part of this, and you tied it all into Jackson Hole. I thought it was interesting. Rates going up here. I think on Williams from the Fed is talking about something. We'll get to that. I'm not sure what he's saying, but rates are going up. So this chart, this annotation here, the white circle, this was this was the producer price index report that came out pretty hot. So I would say like rates were on their way to dropping pretty hard. Like you see this little trend line here. It was already dropping, and it was gonna. I feel like it was gonna go much lower if not for that producer price index report. They came in very hot. We're gonna get a PC on Friday, and the producer price index, I think, drives like it'll the PC will reflect what the PPI
There,
says with about a 2 month
yeah,
lag.
there are
So
various components of the PPI that feed directly into PCE, and those
right.
components were running hot. Yeah.
Right. So we're going to get the PC number on Friday, which is the Fed's preferred measure. of inflation. So that white circle was the PPI. So when do you think? Do you think that the small cap trade is just ignoring what rates are doing here and just focusing on the weaker jobs market? Like,
Well,
how are you?
yeah, small cap. Well, so to the extent that the point about small caps being financed with floating rate debt, like that, the Fed adjusting rates on the short end is what's going to impact them versus what's happening with on the longer end. But I think the market for now is probably going to get a little ahead of itself. I think hopes for, we'll see what the composition of the Fed looks like, but I think the market's getting ahead of itself for hopes for rate cuts. Because I think there's, for all the focus on Jackson Hole, I think there's one really, really big part of his speech and something the Fed did that everyone missed and no one's really talking about it. And it's the fact that they abandoned something called average inflation targeting. So that went away. So back in 2020, the Fed
Did
put
they
into
bring the
play.
did they bring their did they bring their rate up? Their target was always 2%. Is it now
The
higher?
target's 2%, but so under this average inflation regime, they would let inflation overshoot their target if the labor market was weak. Now that was kind of a thing coming out of the pandemic where they said, okay, we're willing to tolerate higher inflation. Well, that just absolutely wrecked their credibility because, you know, all the whole inflation's transitory and then it takes off and you have the highest CPI since the early 1980s. Well, now they're coming out and they're abandoning that. So they're no longer saying we're going to look for, we're no longer going to allow inflation to overshoot our target, which is important because right now core CPI is 3.1%. So they have a decision to make. So they might be flagging risk to the labor market, but they're no longer saying that, hey, we're comfortable letting inflation overshoot our target if it means helping the labor market. So there was a big part of his speech that I thought was very hawkish in that regard. Again, given where inflation is at right now and where it's likely heading in the months ahead, because all signs point to rising inflation in the months ahead. So I think that's going to put them in a very tight spot, especially if they're saying they're trying to restore their credibility by saying we're not going to let inflation overshoot our target. Right now, it is clearly over target.
Yeah, so that's a great point. So why did Powell come out the way he did at Jackson Hole? Why are they so hell bent on cutting rates with a stock market at its highs, with everything at a high, with inflation creeping up, with real risks to it? People just don't see it in the CPI, but I mean, I've put up stuff with Larry here on the air where there was a Goldman report. I showed a chart where 65% of these companies are not passing the costs down yet, but they will. And in the fourth quarter, it's going to be like only 8% of these companies are eating the cost. So that's going down to the consumer. Um, why do you think they're so hell bent on cutting rates? Are they trying to get
I
ahead
Yeah, I don't
of
know. So yeah, I think in the last 40 years, I think the Fed's cut rates one time when CPI has been over 3%. So to your point, I agree. I don't think it happens. I think the market is mispricing. Investors are getting their hopes up for rate cuts. I think the Fed's kind of cornered themselves into having to do at least shift back to data dependent mode. What could really hit the market here is if that July payrolls report was a blip and you have the August number, which comes out next week,
coming hot?
shows that everything's
Yeah,
okay.
coming hot. Then they were
If you get an August
idiot.
number, if you get an August number that's like over 100,000, and it looks like things are okay, and you get a hot PCE print this week, like that is going to put them in a tough spot. That might even call September into question.
Yeah,
So
yeah, and it's gonna. First of all, their credibility goes out the window because they're gonna look like idiots. Which, depending on who you ask, A lot of people already think they're idiots. Trump calls him too late Powell, which I think is fair. It's fair. And it brings me back to the political side of all this. You ask Larry, why are they cutting rates? And he'll tell you he's tired of he feels the pressure. They don't want to get fired. I don't know if that's true because if any Fed member gets fired, they could get a job at any bank, at any hedge fund for a lot more than what they're making at the Fed. Um, so I don't know about that, but it feels like a little political. I hate to say it, it kind of feels that way. Do you think there's an actual political angle here with the Fed? Like, I'm not understanding why they want to cut rates.
Yeah, I mean, yeah, there's definitely pressure. Pressure has been applied. I definitely
Yeah.
think they're having a little bit of an oh crap moment after the July payrolls report. Because just how given how weak it was, and given the downward revisions to the prior 2 months as well. So you have a 3 month payrolls growth average now that's 35,000 jobs. That is the lowest since the pandemic. So I think that's why they're making this pivot a little bit. But again,
Yeah,
I think if they
I think
do, they might do
they
one
might
rate. So they get one rate cut out of this, and they're going to be put back on hold. And I think the market is just setting itself up for disappointment because
yeah,
a lot of things are moving. What's really interesting is that a lot
and
of
that's
there's a,
what I think, and that's what I think is ultimately going to uh, get the market down more than just 2 or 3%.
yeah. Well,
Like,
think about this for a second though. All right, so you had the knee jerk reaction to Powell's speech, and look at what's happened since then. So there's some really key moves under the hood. So stocks are holding up okay. The dollar got clobbered when Powell was speaking. The dollar is reversing that. The dollar is
yeah,
getting back. It's clawing back its losses following
yeah,
Powell and is back to kind of where it was. So why is the dollar weakened on the rate outlook after Powell was speaking, and now it's reversed course. I think there's a lot of things happening under the hood that tells certain corners of the market don't think they're going to be able to really cut all that much. Um, I think that dollar move, no one's really paying attention to that. That dollar move's interesting. That the 30, where you're showing with the 30-year earlier is interesting. That tells me either the economy's doing okay or inflation's about to pick up. So I think all signs, many signs, are pointing to the fact that they're going to be very limited in their ability to do any rate cuts here, and that sets up, maybe there's going to be some disappointment in small caps, maybe some disappointment in some of the mega cap tech stuff that's going to be sensitive to interest rates. So, I think you look at as a trader. I mean, you want to look at what is the market pricing, where can the market be wrong, and that's where I think you can see a trade there right now.
yeah. So where I see a couple of interesting things about where the market is pricing what is in the volatility. In the volatility market, in the options market, look at the move index here that tracks bond volatility. So it's just and this looks a lot like the VIX since April, just straight down. I think I read somewhere that the move in the VIX. You know what? I'll just pull up the VIX since I'm going to bring it up anyway. And here's the VIX curve, which you know what? Hold up. We'll pull up just the VIX cash index and take a look at this move from Liberation Day on down. So this move here, I think, is the biggest decline on record in terms of percentage loss in the VIX in such a short time. 70% off the high, um, and so that's the VIX, which tracks stock market volatility, but bond market volatility has been coming down too. So we could have a situation where volatility goes up across asset classes here, and I think it will. In fact, I'm pretty sure of it because what's been happening in the vol market, in the options market, for the S&P is that the skew has been going straight up, and you could see it very clearly in the VIX forward curve, where I've never seen what spot prices trade so much lower than just 1 or 2 or 3 months out. Like spot prices all the way down here. The cash VIX is like at 1450, right? November VIX futures are trading at 20. So that's a big, and that has, that skew, that difference, that contango in the forward curve and the skew have all been rising pretty good. So what I think is happening, a lot of traders are hitting short-term vol and buying longer-term vol, getting ready for the fall. And what's going to happen is once this trade starts to unravel, right, and they start to buy back short-term volatility and start selling long-term volatility, what you're going to get, and I'm gonna pull up how this curve looked on April 9th, right around Liberation Day. It's gonna look like this again, where they start bidding up um, short-term vol, and that whole trade is going to reverse, and that usually sends the stock market much lower. So the market positioning in for volatility, I think, is getting extremely stretched.
Yeah, maybe you can speak to this along the same lines. But yeah, I saw a stat yesterday that said large speculators have one of their largest net short
Yes,
positions in VIX
yes,
futures.
yes, yes.
I don't know if it's on record or since like 2018 or something.
Yeah, I think I could pull it up. Go ahead. I'll look for it and I'll try to pull it
Yeah,
up
well, I
as
mean,
you.
it's just so I can't think
Yeah.
of anything more mean reverting than the VIX index, than volatility. And I think it's absolutely amazing to be seeing a headline that large speculators are pushing a record net short position when betting against VIX, unless it's part of some other bigger positioning strategy. But to be pushing those kinds of bets against VIX when the volatility index is at pretty much its lowest level of the year. And we're hitting a period of seasonality where you tend to see VIX rise into October.
Here's what I could come up with in as quick as I could. This is the CFTC SIBO VIX futures non-commercial net. So that's your speculators in that COT report, CFTC Commitment of Traders report. Um, yeah, I mean it's been tobogganing down. I don't think it's at an all-time low, but it's definitely at a 1 year low,
and for
multi-year
and
low.
and for those watching, these non-commercial, these large speculators, this is like your dumb money, right? Like you want to look at what the commercials are doing. That's the smart money. The non-commercials, which is also the large speculators, this tends to be the dumb money in this case, where you want to look for reversals off of extreme levels, or what could be the trade when you see an extreme positioning level like this.
Yeah, talking talking about the CFTC report reminds me of I used to work a lot with traders in Chicago when I was very heavily involved in commodities. They love that stuff. They pour over this. They know every nook and crevice and like part of that report. Um, just reminds me of that. Speaking of commodities, by the way, did you guys get into natural gas for the opportunistic trader or
We
no?
have not done anything with natural gas.
Oh, unfortunately.
Were you guys talking about natural gas yesterday, right?
What was that?
Were you guys talking about natural gas yesterday?
Yeah, he tipped. I've been trying to get long nat gas for a long time, unsuccessfully. Like sometimes it works, sometimes it doesn't. Like most recently, it wasn't. I got frustrated, got out of the nat gas trade because it was losing money. Right? You gotta cut your losers quick, unemotionally. And then Larry's like, "Hey," he brought up nat gas. I've never seen him trade nat gas. He brings it up. I revisit it. I'm like, okay, yeah, it looks good. You know, checked all my boxes, and I'm like, now Larry's getting in. I got in, and then he doesn't get in. So what the
He
hell is up with
yeah,
that?
I don't know if he did any something somewhere else, but yeah, on one ticker trader, opportunistic trader, we've been sitting tight on that gas. The one
The problem
somewhat
is
related trade we have on
the
there is with oil. We still have the short oil on.
the problem with nat gas. I think that he ran into was like, how do you trade it? Like it's through for the customer, right? It's like
Yeah,
if
I
you're
mean,
trading options, it's either UNG or Boyle.
yeah. So I was gonna say you have to trade options on UNG probably.
And he doesn't like that. So I guess that's what happened. But I put on, but I also put on Chenier LNG. I don't know if you follow that one.
I do.
You do, yeah. So I don't know. What do you think about that one right now?
Yeah, so I mean, I'm pulling it up right now. It's been a little bit since I looked at it, but I mean, the this whole what I like about it is this tightening consolidation range it's had since January, and you can just see how it's getting compressed narrower and narrower. And so you kind of
Yeah,
wait for the breakout of those ranges. Another one along the same lines
I'm
that I've been watching is
long
GLNG.
consolidation.
Yeah, so I don't know if you follow GLNG. But
Hold
that
on,
was already,
let me pull up these charts as we're speaking about
yeah.
these stocks, folks.
Actually, yeah, GLNG, maybe this is leading LNG, but this is kind of what you want to look for is a move out of
What's
these
the ticker there?
GLNG. And it's a,
GLNG.
yeah.
G. Similar, already breaking out. What is this? I've never traded this. What is this?
Just another appear in that space, another LNG name. Um,
Smaller, I would
company.
assume.
Yeah, I'm not sure their market cap relative to LNG, but I mean, you have a very similar setup, and yeah, I mean, GLNG is already starting to go, which I think that's a favorable sign for LNG
Yeah.
to follow along. But I would just want you want to look for if you're trying to trade these, you want to look for the leaders, so you want to look for the ones that are moving first. And in this case, at least, GLNG is starting to go first. Now, LNG will probably follow, but it's just notable that that's happening there.
Yeah, that's a good look. And since we're just talking about single stock names, Snowflake, I believe, had earnings last night, correct? If I'm not mistaken. And it where's it trading right now? 202. So it it's off of this. What is it? 100-day moving average Snowflake. But here's the thing about Snowflake, and I would like um, I would group this along with and like I'm gonna pull up a few charts and just notice how similar the chart patterns look. Here's Snowflake. Here's Datadog. Right, very similar. Here's ServiceNow. All right, similar. Here's AppLovin. AppLovin.
I've been following App. Yeah, they're close to breaking out.
This one looks good though. But my point was that a lot of these are in that agentic AI basket, right? And that one was supposed to like move the AI trade forward. I think I have a chart on this that I want to pull up as well. They were supposed to kind of move the AI trade forward, right? This was supposed to be like the next inning. Like Nvidia was supposed to be inning one, right? And that's the build out, and now you have the agentic AI companies. But what you've actually seen is the opposite. Look at the spread between agentic AI and the Nasdaq. It's been falling pretty hard as the market bottomed out. So if I'm thinking, what I'm thinking is if and maybe Snowflake's earnings could be a trigger point for this. If we get like another leg up, maybe stocks like Datadog and ServiceNow and even AppLovin, which is doing much better. Maybe maybe that's the trade to make ahead of like a 3 week, 4 week trade, swing trade.
Yeah, I mean, can can you hear me? Okay.
Yeah, we hear
All
you
right, all right,
good.
cool. I got a little warning thing on my mic. Yeah. So there's been those look good. There's been two patterns I've been focused on lately to trade. One of them we just looked at with the LNG names, and that's kind of a tightening consolidation range. I think the other one that's been working okay, especially with some of these more speculative names, is when you get called a bull flag pattern off of a big move that preceded it. So I don't know if you can pull up a chart of Rocket Lab, RKLB.
Yeah, hold up. Rocket Lab.
So
That's a retail favorite,
it is.
right?
You'll know when the bubble's getting close to its
This is
end when all
not,
these
this is
stocks
not
start taking off.
this is
But
gold.
oh yeah, we'll come to gold in a second.
Let me pull up Rocket Lab. What's the ticker there? I've never traded Rocket Lab, but what's the ticker?
So RKLB.
Rocket Lab.
So when you get after you have these big runs and you get this pullback to support. So I'm going to assume that purple line's the 50-day moving average. You know,
50. Yeah.
that peak off of the 50ish level, and then just that, a pretty, call it, orderly pullback to the 50-day. um, you could draw a channel around that price action since it started back in early July. And so that's
Hmm.
the bull flag, and that's the breakout. You can look, when you get a bull flag pulling back to support like the 50-day and it starts to break out. Yeah, I mean that's one, because we've had several names under the hood that had especially on the meme stock side, if you're looking to trade meme stocks, that had a big run coming out of the April lows. They hit a peak
I
and
am
then
not. I am not. I am not looking to trade any meme stocks.
I'll trade a meme stock if they got a little bit of fundamental growth behind them. Rocket Lab actually has some revenues.
I think you guys
So
traded like bullish, right? Did you guys trade bullish for your customers?
we did not trade. I remember Larry talking about bullish. We did not trade bullish in any of the products. No.
Uh, all right.
Yeah.
Well, well, I did. I'm lying. I do trade meme stocks, but usually 99% to the downside.
Yeah.
Like my last meme stock trade was shorting Circle, and I consider that a meme.
Yeah, everyone misses that side of it, right? Like you get, these meme stocks, they make, I'll call it an Eiffel Tower pattern, where their move up looks like the Eiffel Tower. It's like this accelerating exponential rate, and then all of a sudden, and everyone wants to get in on those, but really,
Yes, I had to visualize
where you
that.
can
I
make
had
a ton of money, is when those roll back over. Like, I mean, you can look at Open recently, or look at GameStop. It was the original meme stock back in 2021. I mean, these things eventually hit a level, and they give it all back just as quickly as they ran up.
I don't know. I'm getting into, and the other thing about the problem with memes, with the problem with shorting meme stocks, is when it's time to short, it's difficult through options because the options are so
Too
expensive,
expensive. Yeah.
and you got to like structure it. And even when you apply a creative structure to reduce the premium involved, you're either giving up like all of the upside, or it still doesn't make sense to do anything at all. Relative to the amount of risk you want to take. But in terms of GameStop, I might be getting on the bullish bandwagon just because they're getting into the sports cards collectibles industry, and they're allowing people to like grade their cards through something called PSA, and I'm slowly becoming addicted again to sports cards collectibles, which is hopeless. It's hopeless. It's hopeless. So that might be my next stupid long, that I'm planning. But that's just me. So what are we looking at today? Let's see. It is 9:05, and the straddle last time I checked was under 20. So the market is fat and happy. They're fat and happy.
There's probably nothing coming out today until Nvidia after the close, right?
Yeah, I mean the straddle's at 19. So
Nothing.
I mean I can't sell premium with a straddle at 19. There's because if you get it wrong, like if you were selling call spreads yesterday, you're getting your face blown off, right?
Yeah.
And it wasn't even a big move, and you're still going to get your face blown off if you're wrong. So I don't know. And then if you do it, the only like pocket of time that you have to actually get any premium is like in the first 15 minutes of the trading day, and that's risky because the first half hour is all retail. So you know I don't like putting on positions right at the open usually. I know Larry does, but Larry's different. You
Yeah,
know,
I yeah, like yesterday, I'll usually give Larry a ring about 5 minutes after the open.
he doesn't care. He'll just
Yeah,
he'll
we'll start to look. 20. Recently it's been 25, 30 points away on cash, and there. Yeah, I mean, we did a put spread yesterday, which obviously worked out well. Um, but yeah, I mean, there's with the exception of days where you have a big event like Jackson Hole, there's been so little premium. I mean, we're just a day after day. I mean, it's you're collecting a dollar here, a dollar there, which you string together enough of them, it adds up. But I mean,
but
it's
it's
nothing
only a
compared.
dollar per trade,
Yeah,
right? And you guys, especially Larry, he's used to like bringing in like $3, right, on
I'll say
average.
probably average about $2. If you look
$2.
back,
So yeah, I mean it's very low. So what I'm doing to I haven't I've been the only premium that I'm selling, which Larry doesn't like to do, right? He gets on me for this, but I think it works very well, especially in these environments, is selling deep in the money put and call spreads, deep in the money, where it's like yesterday, the 55, um, the 55.45. I got like $8 on that, or a little bit less, maybe like 750 on a 10-point spread, with the market trading only 15 points away from, you know, from the strike from the high strike, from the 55. It was like a
yeah,
65.40. I'm selling the 55.45s for above 7, and there's like 4 hours left in the trading day. You know, that thing wound up worthless, and it was just a 10-point move. Like that's how I'm approaching. That's how I approach it when there's just no premium to be sold. I'm forced to either go deep in the money, or I'm buying premium instead of selling it.
yeah. I mean that works so long as the environment remains calm. But I think Larry was alluding to it yesterday. It's like when you get into these environments, like all of a sudden, vol's going to come out of nowhere. You don't know what the catalyst is going to be. You don't know why, but when everyone's kind of lulled in complacency, it comes out of nowhere. Which means maybe we need to before we wrap up, we need to talk about Nvidia here really quick.
Shoot, go
Well,
ahead.
I think the implied move after earnings usually averages somewhere around 7 or 8%. But I think couple things, and I'll relate this back to what's the setup with QQQ here in a minute. But one thing is that data center revenues have become critical for Nvidia, right? Like I think it's data centers around 88% of revenue. So one thing to watch for is if there's any sort of supply constraints, meaning if Nvidia is having any issues with receiving supply to meet demand. I mean, demand's going to remain robust. Can they source enough supply to meet demand? But the other thing too is that what does the data center outlook look like? Because just anecdotally, I hear things about the ability to continue to build out the data center infrastructure at the pace it's currently running, whether that's through the infrastructure needed to build data centers themselves or the power demands to when you're trying to bring those online. So I think those are things to keep an eye on. There's also going to be a lot of noise probably around the H20 chip, and if I think they said last quarter it cost them like $8 billion in sales. If I saw one analyst estimate, if they include the H20 in guidance, they could see their revenue guidance increase by like 2 to 3 billion. So with everything around the trade war, there's going to be probably a lot of noise in these numbers, but data center demand, the ability to meet data center demand is going to be key, and it's all going to come down to the outlook as opposed to what they did in the quarter.
Yeah, to me, yeah, I agree. And to me, it's all going to be on his comments about China, because it feels like they don't want to buy any H20s, and they're concerned about like a security backdoor that these chips may have. And Jensen had to come out on TV and basically say we've never had security backdoors on our chips, and don't worry, and it's all good. So I think I think the Nvidia investor wants Nvidia to be positioned comfortably, snugly between the U.S. and China, and selling to both countries, and maybe that doesn't happen, but I think for me it's comments about that which you mentioned. And Nvidia. Do you think Nvidia is like a systemically has like a systemic risk to it for the market?
Oh, absolutely. I mean, given like, look, Nvidia's 10% of the queues. I mean, the top 10 holdings in the queues are pretty much almost all leveraged to the AI trade, and they're 50% of the queues. And so one thing to watch really near term, again from just a trading perspective, is if you pull up a chart of QQQ. Since the end of July, we're building out a little head and shoulders topping pattern. So while the Dow's kind of holding up, the S&P's mostly holding up after Powell's speech. QQQ's clearly made a lower high relative to where it was in mid-August, and there's some really important support right around the 560 level, which coincides too with the 50-day moving average. So that's following Nvidia's earnings because of Nvidia's weight in the queues, and given Nvidia's tone is going to set the tone for the entire AI trade. That's a pattern to watch over the near term. If we've seen some AI names like Palantir and stuff pulling back off their highs. If we're going to see some weakness follow through in the AI trade, I would keep a close eye on that setup in the queues right here. And if we take out that 560 level on the queues, that's a really important support level, and one that would complete that head and shoulders pattern.
Yeah, yeah, but Nvidia's revenues are also very kind of. I think it's like 40% of their revenue comes from. It's very concentrated in terms of like where they get their revenue from. And look, the market is overlooking any risk right now, and in fact, they're selling vol like we mentioned earlier. But to me, Nvidia, and those earnings reports go as they go. Um, I don't think the market is ready to crash on an Nvidia earnings report. And Larry's view is Larry's view, and I quote, is Jensen Wong is going to come out with a pink tutu and pom poms and cheerlead this thing forward. So, that he's probably right. I don't know if the color of the tutu will be pink or maybe a different color, but that's what's going to happen. To me, the Friday PC number from a macro point of view is extremely important. So that to me, for this week, that's the number I'm focusing on.
Yeah, in Nvidia, the PCE report, and then payrolls next week. Like those are the
Yeah.
three things that'll be making make or break for the market right here over the near term.
You think so? We've
Oh,
we've thought that before, right?
100%.
And the bubble keeps chugging along. You mentioned we were. I know it's getting late, but we had an interesting talk, and we were talking about the bubble, right? And I think when bubbles pop, it's usually because monetary policy shifts in a way that is not conducive for more bubble growth. And you were talking about how to trade a bubble. You want to share your thoughts before we depart until tomorrow?
Uh, which specific thoughts on?
On Oh, I thought you had a thing about how to operate within a bubble. How to trade within a bubble or something.
Well,
Am
I
I
think
mistaken?
yeah.
I'm
I mean,
sorry.
well, I was talking about too. When I started trading personally, that was back during the internet bubble. So during the whole, I rode the .com bubble all the way up, and I rode it all the way back down. All right, so I've learned my lesson, and having direct experience trading in a bubble. I think the most important thing when you're in a bubble and when the bubble starts to burst is that you have an active trading mentality, and that can be boiled down to two things. One is that you need to be nimble in the short term. If you're trading the indexes, because you can have, as we saw, in April, downside can emerge very quickly. But some of the market's best days happen during the worst bear markets. You can have these massive reversals. But then the other thing I would mention about that is that, look, we talked about, like Nvidia is 8% of the S&P right now. The top 10 holdings in QQQ make up 50% of the fund. You can be in a scenario, you can be in an environment where these stocks are crashing and they're pulling down the entire indexes, but other sectors are rallying and holding up. And I would point to the fact that during the .com bust,
2022 was like that. Energy,
well,
there were.
yeah, so yeah, exactly. Energy holding up in 2022. And we were talking before we came on the show in 2000, in 2001. If you looked at small cap value in 2000 was up 23%. Small cap value in 2001 was up 14%. Mid cap value saw gains those years as well. So while it looks like, and the S&P and Nasdaq were just absolutely crashing, and so while it looks like the indexes are doing terrible, they're being drugged down by the big names, which we have those conditions now to see the same thing. You can have other opportunities in other areas of the market, but again, everyone's in this mentality. They've been conditioned over the last 3 years that you can just buy and hold Q. You can just buy and hold the S&P 500. It's not going to be like that when this thing starts to unravel, but that doesn't mean you can't find areas of the market holding up and moving higher as that's happening.
Yeah, I'm looking at some of these. We'll get that. We'll do the show tomorrow. We'll get to some small cap value names that have shown up on my screen. But thank you for that, Clint. Thank you, everyone, for joining us today. Good luck trading. Join us again tomorrow. I'm not sure if Larry will be here, but if not, it's me and Clint. Have a great day. Thank you, Clint. Nice talking to you as always.
Yep, good to see you.